Sometimes the best way to fund a business that's growing fast isn't necessarily with a line of credit. If you're billing on Invoice at end of month terms, you might want to consider Invoice finance. And before you say, oh, Invoice finance has got a bad reputation, well, fair, because a lot of businesses that have been in distress have used it in the past and blamed that for going under when the distress and the symptoms that got them there in the first place were probably the real cause. Some Invoice finance can be very expensive, but really that's only the Invoice finance that you get when you're already in a pretty bad way. And all funding or line of credit support for businesses that are distressed or have got mountains and mountains of tax debt or are facing pressure of being insolvent is going to be expensive because the risk to the financier is huge. If you're looking to get funding for Invoice finance to help your business grow, you can get larger lines of credit for under 10% if your credit score is fair and your business and your customers are good. So if you've got ASX listed businesses as suppliers or your customers have got good credit, then you should be able to get low rates. And the good thing about Invoice finance is because it's self-liquidating, when your customers pay, it clears the outstanding balance. You can have a genuine revolving line of credit that brings you cash recognition forward to support you not running out in cash. Now, that's a much better idea than doing unsecured term loans or smaller unsecured lines of credit, because typically, if you're in a B2B space and you're billing more than $300,000 a month, those lines of credit are never going to be big enough to keep up with your working capital need.